Forvis is our featured supplier guest today, and the topic is how dealerships are using private aviation to maximize their business. And we have Keith Deans, Chief Operating Officer of Strategic Source, here in just a moment to open things up. Keith, you can activate your webcam and your audio, and I'll turn it over to you.
Well, thank you, David. Thank you, everybody, for coming today. And over about 2 years ago, SSI began our Innovative Supplier webinar series with the goal of introducing suppliers and solutions to drive cost reduction and revenue generation. And today we have Forvis partner Robert Davis, who brings 40 years of experience in dealership accounting and will share how private aviation can maximize your business. As a reminder, today's webinar will be available within 24 hours, and we'll give you more details on that at the end of the webinar. But without further ado, we'll now turn it over to Robert Davis.
Thanks, Keith. So happy to be here today with everybody. I want to basically sort of get us started today and sort of what we plan to learn today, hopefully what your takeaways will be today. You know, today we're going to discuss whether non-commercial aviation solutions make sense for your automobile dealerships, the platforms, whatever platforms that you're working with. And then if they do make sense, what are my ownership options that are available out there? We see so many dealers that have entered the private aviation market along with all sorts of other industries since the pandemic. And this is actually continuing even into this, I'm not going to call it a post-pandemic phase, but after the initial onset of COVID. One thing that you'll find out if you go down this particular path is that it does take a team. It does take a village to manage and structure the use of an aircraft properly. How much of a village depends upon how you own it, but nonetheless, it's more than just, hey, I think I'm going to run and buy an airplane. We see that a lot in the accounting side, and that's when we have to get out the backhoes to start digging out people that have gotten into bad structures, so on and so forth. Finally, we're going to take some time to meet the main regulators. So what is the FAA environment out there, and what is the IRS environment? The FAA is concerned with safety. Certainly, we've seen them in the news recently with various conversations in the news about near misses and stuff like that. So they've occupied a little bit more of the news cycle than they normally do. And then, of course, the IRS is out there, and their consideration is one of revenue collections and basically enforcing the code that's out there. And then let's not forget at the end about the state and local regulators. So in its right format, we're going to have federal income taxes, federal excise taxes, state income taxes, state sales tax, state use tax, state registrations, and local property taxes as well. All of these need to work harmoniously with one another with agencies that really don't necessarily communicate with one another very well at times. All right, so we'll take a second and talk about who Forvis is for those of you that may not know. Dixon Hughes Goodman and Baird Kurtz Dobson, BKD and DHG by their acronyms, came together in June 1 of last year to form the 8th largest professional services firm in the country. And ironically, and what makes it a good fit today, is ostensibly the largest automotive accounting practice as well that's a part of this firm. Over 500 partners and principals occupy offices in 28 states and also the Cayman Islands and the United Kingdom, and concentrate in at least 10 industries and a total employment of over 5,700 team members working for clients in 72 markets. So nonetheless, big firm, and with that comes the ability to specialize. And in this case, we specialize in the area of aviation as well. And what a nice marriage for today's presentation of the aviation expertise coming together with the automotive expertise, or actually I'll call it subject matter enthusiast. Okay. So for me, I started out in the automobile business. My family owned several dealerships, worked my way through the automotive practice for decades inside the firm. And I was also about the only active pilot in the firm. Now, being a pilot doesn't necessarily get us through the materials that we are going to talk about today, but it does create that enthusiasm. So nonetheless, about 6 years ago, we decided that with every person in the firm touching a plane here or a plane there, and then we have all of this needed specialized regulations that need to be followed, that it was time for us to centralize that stuff inside the firm to minimize risk for our clients and also for the firm itself. And so that's how the aviation department was born. I'm a member of National Business Aviation Association's tax committee. You might think of NBAA as the NADA for aviation, just to try to put those two together. So what we do in this department is we're part of that team that we'll talk about as we go along later on today. We assist with the structuring, the planning, the tax compliance, the reporting, and the risk mitigation. We do not function as attorneys. That would not be a good mix of a bunch of accountants trying to draft legal documents. So we do refer out to legal counsel as needed. But for those one-off questions that come along that don't necessarily need a full-blown engagement with legal counsel, we also keep aviation legal counsel on retainer. So that's sort of what happens. We'll call it in the aviation department. And so now let's pop a poll up here and get a little idea of what the nature of the audience is and where they are in their quest on looking at non-commercial aviation. So at any rate, I believe that you might be able to pick a choice here. Is that right, David? All right. I see a person out there that already owns or leases an aircraft, a couple of people that are trying to make the decision. Here's somebody that's been in the airplane side of things, or perhaps already are there. So nonetheless, I see 5 responses. Here's a few more coming in. Nobody's on the bottom, which says, hey, we decided to pass, which I'd be sitting there scratching my head going, why are you here? So nonetheless, that's the story. So the choices there, that at least on my screen, they're a little cut off, but the first one we already own or leased. The second one, we're in the process of gaining access. The third one, we're trying to decide if this is the right thing to do. And the fourth one is we're just not going to do it. So a bit of a mix, and that's sort of what I expected, and that's actually fairly exciting to have it come in that way. So nonetheless, let's go ahead at this point and let's talk about how dealerships, or really quite honestly, any business can use private aircraft. What does it do for you necessarily? Well, basically, what it does for you, it is a matter of productivity. It has been said many times that you will never justify the use of a private airplane because the numbers don't work. But there aren't numbers assigned to soft cost. There's a saying in the industry, no plane, no gain. I believe that's trademarked by NBAA. And I've had many car dealers turn around and say, now I understand that once they got into using non-commercial aviation. The productivity, the time savings for travel, as far as getting to the airport 2 hours ahead of time and then taking a 3-hour layover and on and on and on, and then waiting around for bags at the other end, getting the rent car, finally getting to where you're going to go. It's slightly different with a private aircraft, and you begin to knock hours and hours off of what's happening from a productivity standpoint. We have dealers that will load their airplane up with people that they need to meet with that have nothing to do with the purpose of the trip. they'll sit there and say, I just need some time with you, and we're going to use the flight time to have a meeting. Plus, if you got a team going to look at a store you're thinking about purchasing, you're not all going to get together and discuss it in the aisle on a commercial flight when you're bound by confidentiality in the buy-sell agreement or the LOI. You know, the airplane serves as a flying office. So efficiency, face time, just pick your people, clients, vendors, employees, business associates, whatever it is. That time on the airplane and the time not wasted on the ground begins to add up. If you have multiple stores, you know, I had a client that for years said, I don't own boats, I don't own planes, if I get examined, I'm clean, just pristine as I can be. And he prided himself on that. Well, the son and I got to running around, and he decided he liked aviation, and Dad said, well, okay. And they bought a Cirrus, and then they upgraded to a TBM, and now they own a Phenom 300. And because of that, now they have businesses stretched across the U.S., not just automotive, but most of it is automotive. And he tells me this was the best decision we ever made because we can get to where we need to be. So finally, and we all know in the car business, it's one meeting right after another you're asked to attend, whether it be manufacturers, 20 groups, make meetings, NADA, whatever it is, those meetings, and then you have multiple people go into those meetings. Maybe there are other people that need to go. The dealer principal doesn't need to go. You put them on the airplane, you send them, you get them back occupied in the business again without spending an extra day each way, getting there and getting home, being away from what they do for you. So that's sort of where the usefulness comes in. And all right, now, what does the market look like right now for private aviation? What it looks like right now is it's tough. It's tough to find an airplane. There is super high demand since the pandemic started. There is low supply. Sort of sounds like what we went through on the car business side for new vehicles. And so nonetheless, that is an issue. Right now, if you want to get, say, a Cirrus Vision Jet, they're taking orders for 2027. There are many other highly popular planes that are out there into late 2024. The same problem exists in the fractional market. In this business, they talk about the book to build ratios. That's how many deposits are on file and booked for production versus how far they are behind in that production. Book to build right now, it's gotten a little better since the middle of last year, but it is still high demand, low supply. And that goes for the fractional owners as well, where they're getting planes as fast as they can put them in the fleets. But let's also talk about picking the right aircraft, whether you charter it, rent it, lease it, own it, whatever, picking the right aircraft for your mission. The exercise I take clients through that are thinking about this, talk about the exercise of dealing with plotting where you went last year, where you think you'll go this year, and begin to look at that on the map and showing this to, say, NetJets, FlexJet, your aircraft broker, whatever, any rate, and you begin to throw out the outlier trips and choosing a plane that meets most of your flights in terms of passenger carrying capability and also in terms of range. So it's sort of just an exercise that our clients have to go through so that then they can articulate their needs to whoever is helping them through that sales process. So that's something that you would need to do that I highly, highly suggest. Which leads us into the types of aircraft ownership. I've put 4 basic types on here, and we'll work from the right-hand side to the left-hand side of the slide in terms of my commentary. So just a small usage. You need something less than 25 hours a year. I mean, just do a dry lease with another dealer friend of yours, and that's a technical term in the FAA jargon, or just go to the airport and charter an airplane. Okay, it's not something that you need to go whole hog into this entire ownership scheme if you're going to do something that's less than 25 hours a year. You've got 2 or 3 trips, and that's what you need it for. If you're getting above, say, 25 hours, let's say 25 to 50 hours is sort of where I move to the next spot, and you see people that offer jet cards. These first 2 options, the cost is higher on a per hour basis, obviously. That's what you would expect, but it's a lot less than the whole or fractional ownership in terms of the small number of hours being used. So if your executive wants to use a plane for 25 to 50 hours and they want to take selected trips here and there, and some of those trips can be for non-business reasons, certainly, I just wanted to let you know that the jet card may be the way to go with that. If you're in the 50, say the 200-hour range, you may want to look at the fractional players. You've heard of them, FlexJet, NetJets. I could name 2 or 3 others. But it is those operators that are in the business of dealing with customers that are in that range of ownership or have larger number of hours that they need, but they may need a variety of airplanes. So they'll contract for the plane that they need the most often, what made the sense when you went through that exercise plotting your travels. But then in the fractional ownership market, you can move up or move down in the fleet, if you will, to take that one trip with more seats than you had on the type airplane you originally contracted for, or less, or you need something with more range or perhaps less range. And there will be adjustments in your fractional contracts that allow you to move up and down in that particular ownership scenario. Also, if you want to lease fractionally instead of owning fractionally, that is also possible with the large fractional operators. All right, finally, the place that so many car dealers end up landing is whole ownership. I like to think of it as being more than 200 hours of use in a year, but I also know car dealers that have the fiscal capability to use it less than that and still have whole ownership. Or they decide to take their extra hours and put it out into the marketplace through a charter operator and deal with that. And we'll talk about that more in just a moment. But nonetheless, your airplane, get to use it the way you want to, and it's always there for you. But as airplanes like to do, they eat money for dinner. And so the proper tax planning to garner the tax effects, the favorable tax effects of those deductions is paramount in order to work the budget the way you may have anticipated that it get worked. All right, so just checking to see where we are on time right now. And we're actually a little bit ahead of time, so I get to spend a little more time on this very important slide. I said in the beginning of the day, it takes a team, and this is the team members you normally see. So we're going to start with somebody that helps you locate an aircraft. It's either a sales team or an individual aircraft broker, but it's somebody that's dealing with this day in, day out. That's the theme of this slide, is these people are day in, day out, dealing with airplanes. For me personally today, I was telling Keith and David before the session started, this is my 7th call having to do with airplanes since the sun came up this morning. So we deal with the broker, you locate an airplane, you begin to go through the process and move down through the pre-purchase inspection, getting squawks taken care of, getting that plane the way you want it, getting prices negotiated, so on and so forth. Aviation legal counsel is next on the list. you need to hire somebody that deals with all of the legal paperwork that is on your side of the transaction. Okay, we've all dealt with aviation, attorneys on buy-sells. It's nice to have one that deals with dealership buy-sells. Well, same thing here. You want one that deals with aircraft. General corporate counsel is not your answer here unless they have some type of aviation specialty in the firm. Next is the accounting firm. That's where we sit here at Forvis. And it's interesting the way this works because everybody on this team gets questions that pertain to what people in other seats have. So before the day is out, it's already happened this morning. It's like, well, sir, do you have aviation counsel? Well, no, I don't. It's like, would you like me to refer you? Well, no, I just have a question or two. Well, I'll answer a question or two, but if he needs a legal document, we're not going to serve as counsel. We refer that out. And so nonetheless, our job in this scheme of things is taking care of the state, local, and federal taxation numbers and getting and working through those complexities and getting them into various compliance and reporting mechanisms, whether it be various tax returns, property tax renditions, so on and so forth. You're going to need an insurance broker, and aviation is its own specialty for insurance. So you find people out there, again, that's what they do day in and day out. And especially for large aircraft, there are a lot of nuances to this. I want the right named insureds. I want the right additional insureds. I want the right deductibles and coverages in the liability and hull coverage. And as the structure comes together, the insurance company is front of the list to tell, hey, I have a dry lease or I have timeshare agreements. That's a technical way of ownership. I'm either co-owning, I'm jointly owning, I'm leasing between two of my own companies, who's using the airplane, and then getting the pilots named in the insurance contract or making sure that they meet the open pilot qualifications inside that contract. Finally, whether you're going to operate this airplane for charter services or not to third parties, that is a huge difference, and we'll get to it in a moment in the insurance contract itself. The next bullet, got to have somebody to keep it flying in terms of maintenance. I want a maintenance team that specializes in the aircraft that I own. Okay, now if I'm doing fractional or something like that, that is all taken care of by those operators. If I'm in a whole ownership arrangement, I want a maintenance team that deals with whatever is in my hangar, not something like, oh yeah, I'll do that for you. This is the only one of these I deal with every year, blah, blah, blah. You wouldn't do that for your dealership accounting. You wouldn't do it for a buy-sell. Don't do it with your airplane. And then finally, depending upon your structure, you may need an appraisal of the lease rate if you have dry leases in place, because if you use fair market value inside that lease, you garner certain tax benefits that you would not otherwise. If it is an airplane that's large enough, you may want a management company to handle many of the maintenance items so that when you need the airplane, it's ready to go and you're not having to deal with some of the maintenance minutia that comes with the ownership of aircraft. And then finally, somebody to fly it. You may have a pilot that ends up on your payroll, or you may contract with someone. And also the FAA watches very closely in dry lease scenarios where that pilot comes from so that you aren't doing what might be known as an inadvertent or illegal charter, which would then have a real problem with the insurance as well. So that's sort of the team, if you will, that you surround yourself with. And hopefully that was good information for you. All right, let's move on to the regulators. The first one that I like to deal with is the FAA. The FAA is concerned with safety. If you put the FAA and the IRS at a table together, they look at each other, and it's sort of like that commercial that we see, what is it, where it says Shingles doesn't care. Well, they look at each other and whoever they're talking about across the table, they don't care about their rules because they're here for two reasons. These guys for safety, the next guys for revenue collection. And sometimes their rules butt heads. What is of a big concern to the FAA might be a non-event to the IRS. And if you're only dealing with an accounting firm that's not familiar with the FAA, they may lead you right into an FAA trap while they're trying to design some type of tax efficiency. So in the FAA side of things, the very basic piece of it, and we could spend all day on this, is Part 91 versus Part 135. Part 91, for the vast majority of it, is operating an aircraft for your own use, basically. And Part 135 is operating an aircraft for compensation. If I want to use an aircraft for my own use, can I use it under Part 135? Yes, I can, obviously. Are there some Part 91 flights that look like Part 135? Yes, there are some very specific carve-outs. But the things that happen here, Part 91 operations are super, super restrictive as far as reimbursements. Already had a call this morning with a brand new client. It's like, hey, I got this plane. It took forever to get it on the charter certificate. So I just lent it out to some of my friends this morning and they paid me. That's a problem. Thank goodness nothing happened on those flights. So nonetheless, restrictions on Part 91. It's very restrictive for reimbursements. If you have a dry lease in place, operational control goes to the lessee. Okay, so they definitely, and operational control is so important to the FAA and the regulations. It is section 1.1. That is the definition and where it's embodied. And so if you get ramp checked and the dealer's on the airplane and they walk in and the FAA says, hi, I'm with the FAA, who's in operational control of this flight? Hopefully the lead passenger does not say, well, the pilots are up front, they're flying. No, that's a technical question and it needs a technical answer. Okay, so we train our clients on how that gets answered. All right, Part 91 operations are less restrictive as to maintenance. When you go to Part 135, operational control stays with the lessor or the operator. So if you walk in and charter a plane at your local airport, operational control stays with that charter operator. Part 135 has more weather restrictions, higher maintenance requirements, higher insurance premiums, and we've all been at the gate sitting in the commercial airport, and you're waiting, and the plane's late, and you're waiting and waiting and waiting, and then finally the pilot walks out, and he grabs the microphone, and he starts his announcement with, we've all heard that. And so it's, sorry, ladies and gentlemen, the crew just timed out. That can happen under Part 135. So nonetheless, but the nice part about 135, reimbursements are not an issue. You can move money around in your dealership organization for wherever you want the financial burden for that flight to fall, and the FAA is not going to care. All right. The next behemoth on the table is the IRS, and it's all about revenue collections for these guys. Okay? And so with the revenue collections with these guys, let's talk about it a little bit. So we all have demonstrators on the balance sheet. The personal use of corporate assets, which is what using a demonstrator is. We have demos in our car businesses, and we add, we'll say, monetary values of that to people's W-2s. All right. Well, guess what? There's a similar compensation schedule for airplanes. It happens to be called the Standard Industry Fair Level Tables, or SIFL for short. Some people say SIFL, I say SIFL, but it's very similar to adding income for demonstrators. So the personal use of corporate aircraft causes income to be added to passengers or their host, okay? And then entertainment use of the aircraft causes the operational expenses of the aircraft to be subject to rules that cause disallowance. And it's all expenses. It's depreciation, debt service, maintenance, hangar, wherever the expenses lay for operating that aircraft, construe that very broadly. That's what's going to be subject to the expense disallowance computation. All right. And oh my gosh, the number of times I get on the phone with a dealer and he says, hey, I've talked to my buddy. He's got a plane. He loves it. And he said he wrote the whole thing off. Well, I've sat in rooms of people at the front of rooms of 400 people in the audience. I think one of mine was sort of like the Paul Simon song, 50 Ways to Leave Something. In this case, it's 50 ways to leave your depreciation laying on the floor. There are many, many ways that depreciation can be lost before it gets to finally being able to lower someone's tax liability. Again, this is back to structure. It's getting in front of it on the front end and using the airplane properly, especially in the year of acquisition, and less so in subsequent years. Because if you manage to get all that depreciation in year one, there is a test for, at least for Part 91 operations, a test for the next 6 years that you have to pass as well to keep it from flying back to you as income unexpectedly. So don't be misled by the sales pitches and the buddies on the golf course, whatnot, that buy an airplane and I can write it all off. There's a lot more to it than that. Okay? Struct size tax, they're generally associated with Part 135 operations. If you are chartering that airplane to third parties, typically the charter operator will take care of that. But if you enter some other Part 91 arrangements, such as timeshare agreements, also subject to excise tax. So, nonetheless, and you'll end up doing it yourself. Now, finally, airplanes do get examined. They are a favorite of the IRS. We are used to it. Even with the size firm that we have, though, we only have 5 to 10 aviation clients under exam, typically in a year's time. And typically, I'd say 25 to 50% of the time, it results in some type of examination adjustment. But I'm proud to say that all those adjustments thus far have come from us picking up other people's work and dealing with it on a go-forward basis. So as I sit here right now, knock on something, at least at Forvis, those airplanes that we have dealt with, we have not had an examination adjustment as of yet. Now, so it's nice to know also, because we have agents that come into this and go, oh, you have an airplane, and then they begin to go down through their little book about how to do airplane stuff. And sometimes they get off track, and we become educators to those agents. But sometimes those agents think that that's not a good thing to listen to the taxpayer, to be an educator. And so we know the IRS has subject matter experts as well. We cannot call them directly, but we can tell the agent to call them. And we know them. And we're like, hey, drop our name. And typically they're like, oh yeah, those guys, we know about them. So nonetheless, that's the deal there with the IRS. Now, not to forget the state and local guys, okay? And then I'll get to this slide, but not to forget the state and local guys. Sales tax, okay? Well, that is something here. I see structure. That's very important. And it does come into effect here. Sales tax, easily avoided in airplane transactions. Okay, if you pick up the airplane from another state, make sure you do it in a state that has what's known as a flyaway exemption, and you don't have sales tax. All right, but it doesn't stop there, because then the airplane comes home to roost, wherever it's being hangared, and there are taxes in that jurisdiction. And if you didn't pay sales tax somewhere else, you'll probably end up paying it in this jurisdiction, unless you have some type of lease in place. And that lease may not be, it'd be regarded for sales tax purposes, but with the right structure, it's disregarded for income tax purposes. And so what's the deal here? If you do it right and the state allows it, then you're able to not pay that sales tax up front, but instead pay it on the dry lease payments as they occur across the span of ownership. If you plan on owning the airplane a very long time, you'll probably find out that the sales tax actually is cheaper to pay on the front end. And in certain states, there are laws in place that make it very inexpensive in terms of sales tax. I can buy a $50 million airplane in South Carolina, and if that airplane's in South Carolina, I mean, sales tax is like $500, something like that. Now, it used to be even less than that. So obviously, even if I had a lease in place there, I mean, for that state, sales tax is the answer. Also, property taxes are out there. There are some states that don't have property taxes on airplanes, Florida being one of them. But for those states that do, some jurisdictions allow you to prorate those property taxes, either based on departures or landings in the jurisdiction where you're being taxed, miles flown over the jurisdiction. That's a fun one. Luckily, our software does that. Or some other allocation methodology that when you get your big property tax bill, then you pull out this other report, attach it, and say, no, I only owe 15% of this bill because only 15% of the days of the year was the airplane actually in this jurisdiction. The rest of it, it was doing its job, flying all over the place. So that's an example of property tax and some of the things that can be dealt with there. All right, so moving along. So you may be sitting there thinking, hey, I'm hoping you're sitting there thinking, but you may be sitting there thinking that we don't have a relationship with Forvis. I just got this notice from the boys at Strategic Source, and and it sounded interesting. Look, the aviation department sort of stands on its own inside Forvis. We welcome relationships, with folks that we don't do anything else for. So then we plug into your accounting firm, or we plug into your aviation council or whatnot. We become a member of the team for that purpose only. Okay. And so they can be standalone engagements. I keep saying it. It takes that team. The team needs a quarterback. We're happy to serve that role. Now, are we going to tell the mechanics what to fix on the airplane? No, sorry. But we sort of bring together the efforts of counsel, of the accounting firm, and then of our aviation department, whether it be internally or externally. We operate, our engagement teams are just like clients to us internally. And so we get them the information they need. And so that's sort of how this thing functions. How much does it cost? I answered this question right before lunch today. Doing the computations themselves, how many airplanes, how many unique passengers we have to set up, how many flight legs were taken, so on and so forth. This gets those computations done, and measuring it like that is proportionate to the lift that we have to make to get the computations done. A little more in the first year to get stuff set up. As far as structuring and other type information that is not having directly to do with crunching those numbers, it's just an hourly rate, just like you would pay your accounting firm that you're dealing with right now in terms of consultation. So that's how much in terms of cost, or at least how we do it. How long does it take? The consultation can take however long it does take. Once we get the numbers to do the computations, to input into tax returns, we typically turn it around in a couple of weeks. So that's a few questions that are answered there for you. I get the satisfaction of having these phone calls and working every day with this stuff. And most dealers just want to be able to use their aircraft and not bother with the details. The problem with this is that you can't avoid the details. Avoiding the details is dangerous. Okay? It is a detail-oriented area. It can be costly to not do it, whether that be because a regulator walks in, or it's an IRS exam that happens, or Lord forbid, the airplane has an accident or incident. Okay, so it's so satisfying to put together a good structure that gets a client more than what they expected. It's gratifying really to explain the rules, have sessions just like this, explain the rules to those that are willing to listen, suggest alternative structures, and most of all, getting out in front of the acquisition rather than finding out about it after the fact. On the slide is some of the things that happens, just some of the things I remember that I've smiled at over the years. A big flight department, probably about a month ago, I'm sitting there thinking, the dealer said, why don't you go talk to my flight department? It's large, okay, multi-aircraft. And I'm thinking, these guys, they're going to think, what are these bean counters going to teach us, And so nonetheless, I'm sitting there for 90 minutes. We're drawing all over a whiteboard and looking at structure. And the head of the flight department looked up. He goes, where have you guys been? This is phenomenal. I just had to sort of sit back and tell him I was worried that they were wondering why in the world we were there. These meetings where I get a phone call, there's no way we're going to get depreciation, and I said, well, hang on, let's talk about it, And so then you come together for a few hours, draw stuff on the whiteboard, and you walk out. And with the client's ability to maintain a little discipline in the year of acquisition, they got to write off the whole thing, And then the people that come for help, and it's like, we just want to do it right. I need an attorney. I don't know who to call. And then finally, we finally got somebody that can do these numbers for us. So that's just a few things that happen. That's what makes it so satisfying for us anyway. An engagement begins, like I've said, with looking at your situation or helping you get a team together, wherever you are in your journey, in terms of trying to decide. Or if you already own an airplane, just looking and having some peace of mind that, hey, we've had somebody look at this, and this is what they do day in and day out. So I'll stop yakking for a second, and we'll start talking about Q&A a little bit. All right. First of all, I have one question that's in the queue right now, and I'm going to go ahead and answer that. And it's like when you use the term hours, are you referring to total travel time or time in the air? This is looked at a couple of different ways. It's not total travel time. Sometimes it's measured by the time that you start the engine till the time you shut it down. We'll see that in terms of hours. Sometimes it's from the time that the wheels leave the ground till when they touch the ground again. That's a measure of time. The final measure of time is tachometer time on the engine, and that's the one that the maintenance guys care about. Sometimes they'll go that way. But the first two options are the ones that are generally used. Now, I will tell you this. I don't care which option you use as long as it is used consistently. In the tax computations, we're computing percentages of different flight types. And so as long as we're consistent, we'll be in good stead with the taxing authorities. Any rate, are there any other questions that are out there?
Yeah, let me remind everyone that you can type in a question for Robert on the Q&A button, or click the Q&A button, get a box there to type something in for Robert, and we have a good amount of time remaining for that.
Yeah.
Here is one. So when you review an aviation structure for a client, how often do you suggest changes to that structure?
I'm going to say most times, if we're not out in front of a structure and they haven't utilized an aviation team per se, I'm going to say there's going to be something wrong with that structure probably over 3/4 of the time, either from a tax efficiency or an FAA regulatory standpoint. So seeing issues with structures is the order of the day for our team. It's not the rarity, it is more the rule.
All right, here is another. How many IRS examinations do you see of aircraft in your size firm annually?
I was talking with our IRS controversy team, and we actually have members on our aviation team that deal with IRS examinations as what they do all day long. And then when they're on our team too, that means they get all the ones that involve airplanes. Right now, as we sit here right now today, the firm has 3 that are ongoing, and we typically see, I'm going to say, close to 10 a year. And like I said earlier, we'll see an adjustment probably 1/4 to 1/2 the time. And typically those adjustments come from before we had our hands on how things should be done.
Besides everyone having a chance to ask questions now via the Q&A button, do stay on till the end of the time. We have a post-session survey for you. Here is another. How often do you see FAA structuring and compliance issues in the relationships that you start with clients?
Very similar to that first question, but specifically to the FAA deal, because I really try to pay attention to that. I'm going to say, sitting here, I mean, heck, we just used this morning as an example. I found out of 6 phone calls before this one, I think there were 2 of them that had FAA issues, and one of them was a very serious issue. When that client got off the phone, I told the engagement team, I said, this is a major mess. And so, at any rate, we're going to start trying to dig through that and get that client to a place where they're better off. So I'm so happy that we were able to get a hold of that particular situation and begin to work on it. But we see it all the time. And we love trying to get things the way they need to be.
Let's try to fit one more in here before we bring Keith back here. How often do you hear my friend wrote his or her airplane off completely? I want to do that too.
Oh, I hear it about once or twice a month. But instead, and I also get this other one of, what do you mean I'm not writing it off? My buddy got to write it off. Why can't I write it off? And it's like, well, maybe your buddy flew it differently. I don't know. Or maybe they got somebody that is not doing what needs to be done. But nonetheless, as I said earlier, there's many, many ways to lose expense deductions. Some of them are straight up front in the airplane computation because of entertainment use of the airplane. But then you get into all the other things that are not airplane specific that turn around and give you heartburn on trying to get those deductions to the bottom line of your tax return. It all starts with how the airplane's being used. And then I've got another question that's just hit the queue. I'm just going to read it. We've all read where the IRS is hiring more agents to conduct more exams. What about the FAA? What is their enforcement environment right now? I love that question. I didn't even think of talking about that. So right now, the FAA is like a lot of other agencies. They don't regularly show up unless there's something wrong, and so, and then if you have an accident or incident, they are all over you, doing what they do best, and that's regulate. And so if there are problems that exist in your structure or your operations, they will discover them at that point. And the next person that wants to know about what they find out is the insurance company. But nonetheless, they are stretched thin, just like so many other businesses are. Just like this guy I talked about earlier this morning that, hey, it took me forever to get my airplane on the charter certificate. And so I just sort of lent it out to my friends in the meantime. Well, there were ways to lend it to his friends legally, but that didn't happen. And so we're dealing with that. But nonetheless, they're crunched as well. So, but one of their things that they are all over right now, and you can go Google this, okay, is that they are looking for illegal charter operations. Well, those are the ones that maybe somebody at the airport's doing one, but by the same token, as an individual operating a private airplane, you may accidentally structure yourself into an illegal charter accidentally, and it won't be that noticeable to you, quite honestly. You're just doing what made normal sense. And all at once, you could be the target of an investigation, not necessarily like the big operator at the airport that's not doing it right, but more likely if something happens with that aircraft that causes the attention of the agency, and then they start peeling back the onion and finding out that the structure was not put together properly. So hopefully that answers that question.
Keith, let's have you reactivate your webcam here and do a wrap on the session.
All right. Well, Robert, I think I learned a lot more than I expected. Thanks for sharing, your expertise on, the cost and selection of private aviation. But I think the one thing that I really took away is that it takes team expertise really to manage the details to create that good accounting structure and give you those protections and eliminate the headaches of private ownership. So thanks again for coming today.
My pleasure. Thank you so much for the invitation.
Yes. Well, just as a reminder, a copy of the webinar will be available in about 24 hours. If you're interested in receiving a copy, please contact Chris Austin. You can contact him via text at 612-386-3898, or you can reach him at sales@strategicsource.com. Again, want to just say thank you again, all of you, for joining us today, and be on the lookout for the next Innovative Supplier webinar. We'll bring you suppliers and solutions to drive cost reduction and revenue generation. So have a great day.
Bye-bye.
David?
All right. Thank you, Robert, and thank you, Keith. And I brought up the post-session survey. 2 quick questions to get your feedback before you leave. Thanks, everyone, for attending today. And we look forward to you joining us on future sessions with Strategic Source. Have a great rest of the week, everyone.
Thank you.
See ya.